As always, we give you guys the sauce. Let's go over this trade so that you guys can literally see how I apply my strategy that makes pretty much 12, 15, 17 R within a single week. Whenever it does, win rate's pretty high too. So all you really need to do is firstly understand the higher time frame narrative of whatever asset class you're trading. If the asset is bullish, like it shows here, and you have higher highs and higher lows being made, all you really need to do from there is say find time frame alignment to justify the higher time frame bias, and then just enter. So how do we do that? Daily time frame, check, we are bullish. There was no bearish break of structure here. This was a daily liquidity sweep, right? So with that being said, now we scale down with knowing that the daily is currently bearish and we expect expansion. Next, the 4 hour. The 4 hour is bearish here. I am aware of that. But what tells me that one, we are bullish? One, this is actually like a red candle. But on top of that, what really matters is the fact that we have hourly structure invalidating the bearish 4 hour structure, meaning that, the 4 hour is about to switch structure. Because if you have an hourly buildup of liquidity or you have an hourly change of character, meaning that if the hourly is currently was at least doing this, right? And then it decides to reverse. It hasn't yet shown on the 4 hour, but it will likely turn into a 4 hour expansion like this, okay? So if you have the hourly on your side, that means that the 4 hour has a good chance of flipping in your direction, and therefore you'll likely catch the reversal, right? So we know that the 4 hour is bearish, even though this is technically bullish here, but we're going to need the hourly to justify for us to go long, because we need justification for price going higher. So how do we find that? We wait for market open, right here. And we see that the 7 a.m. hourly candle closes with a break of structure, the first one between all of this, because there's no hourly break of structure here, not here, not here. It's finally here that we go over the previous down candle's complete wick, not body, but wick. See, that's the important part. It needs to go over and close above the candle's wick, not body. Please, that's the most important part of this. If you cannot identify what a break of structure is, you'll continuously lose money. So what do we have here? We have London open that liquidates sellers, buyers, and goes into a premium zone before the expansion. Okay, so buyers are being stopped out. Now we're going to get a change of character to the upside. Here it is. Now we're pretty much looking to enter, right? So hourly is on our side, meaning the 4 hour, even though it is bearish or looks bearish, it's actually going to likely be a flip into bullish structure. Next is you scale down to the 15-minute because you want all time frames to align so that the market will naturally drift in the direction that you expect it to, which should be the higher time frame direction. That way you can catch an expansionary wave. What happens here? 15-minute break of structure. So at this point, all we're looking for is 5-minute and 1-minute justification, because we've already said the hourly, the 4 hour, the daily, and the 15-minute are all good to go, right? And we can also see that price here, market just opened, right? So we want to find a point at which we can see bullish buyers take control, but more importantly, we want to see a point at which we see liquidations occur. So where is that? So we see that market opens, makes this 15-minute break of structure. There is this premium zone that we look at. So we want to identify where within the last expansionary move will price likely draw to before it expands. That's all we're looking for, right? So there are many places to enter. Here's one of them. The first one being, we see that the 5 minutes bullish, the 15 minutes bullish, the 1 hour is bullish, the 4 hour is bearish, but we've justified for it to continue going higher. We've justified, and we said that the daily is bullish. So all you really need to look for to enter here, so that you don't get stopped out, is a liquidation of buyers, and a inducement of sellers. So we just scale down to the 1 minute to find the final bit of justification so that we can enter. Now, there are more complex things that you can add to this, like liquidity, fair value gaps, all of that fancy stuff. Honestly, I do use it, but sorry for the screen going out, guys. But